business, it is that time again, that time that we want to start pre-planning for tax. So there's two ways that you can actually tax plan. One is that you do it after the fact, which means that you can shuffle things around with the accountant to try and make what has already happened look better. And then there are times like these where if we get a little bit of foresight into the future, we can plan ahead and make sure that whatever we can do before the end of the financial year is done in order to minimize tax where appropriate. So there's two ways that you can plan for tax. One is ahead of the game and one is after the game. And they both have their place, right? So for those of you who are in business who do want to start planning for their tax, throw any questions in, by the way, if you're jumping online while I'm putting this through. But if you want to start planning for your tax and you're a small to medium business owner, this is what you need to be doing now. So we're about to do our March BAS if it hasn't already been done. So what that's going to do is that's going to give you an insight into what the last 3 quarters have been, right? So you've got 3 quarters into this financial year that you've already been trading across however many entities you have, right? So what we need to do now is we need to look forward and we need to go, okay, so what business is there coming in over the next, 3 months? And for some of us, it's going to be very easy for us to judge that. For some of us, it's going to be a little bit more difficult. If it's a little bit more difficult, then you can take an average, right? So if you don't quite know, you can look at what it was the year before and just average out what the average growth has been on the business and just put a little bit on for that month to the previous quarter for the previous year. Or if you're a business who actually knows what you're doing, like let's say a builder who knows that there's various different stages of completion, lockup, so on and so forth, and you know what's going to come in with a high degree of likelihood, then you can almost plan to, well, not to the dollar, but you can plan really, really closely. So what we need to be doing is obviously making sure that your BAS is up to date, making sure all of your bookkeeping is up to date, and then going, okay, given where we're tracking, what is the next quarter going to look like? All right. So what is April, May, June going to look like from a revenue perspective? And we add that into our cash flow forecast. For those of you who work with me, you know that you need to be having those cash flow forecasts in place. These are the things that we need. These are the dashboards of our business. So now it is time to make sure that you've got the financial year completed from a forecasting perspective, because what that's going to allow you to do, and we're going to go into some more detail with some tax planning sessions that'll be coming up soon, especially after the budget, but that allows us to make decisions, especially given the new legislation that is still in place that relate to, COVID and depreciation and all of those sorts of wonderful things. But this gives us the ability to be able to combat in front of the game, right? So we don't sit back in July and August going, geez, I wish I'd done that, or geez, I wish I knew this was coming. What it does is it allows us to go, okay, well, we know we're going to have a significant tax bill. Are there things that we can do this year that are going to be wise decisions for this year? And if they are, let's evaluate doing them. If they're not, let's not. There are times where, yes, you'll hear this, that all you're doing is you're kicking the tax liability down the road. That may be true, but we don't know what next year is going to be like. So why not minimize what you can this year and then allow next year to be next year? And if that's going to be another tax challenge, well, let's find their ways of dealing with that proactively rather than looking backwards. We know that analogy about if you drive looking in the rearview mirror, eventually you're going to have an accident. It's probably going to happen sooner rather than later. So let's get proactive about it. The steps that you need to do as a SME, small to medium business owner, is you need to make sure that your March BAS is up to date, right? Get it done. Always should be done as soon as humanly possible. Make sure that you have forecasted out the next 3 months into your cash flow so that you have an estimated net profit figure that we can then figure out, okay, if we're going to be this profitable over the course of the financial year, what does that mean for future distributions? And then you can start to have conversations, which we'll talk about in probably about a month's time. We'll come live to you. We've got some really cool stuff actually that we'll be bringing post-budget and some tax planning sessions, not just for business owners, but for salaried employees as well. We'll bring those forward. But for now, you need to figure out what the end of year is going to likely look like so that we can start to plan for it. And I'll look forward to any questions that you've got coming through. But otherwise, you know what to do. Get on top of it. Get your forecasts in place. Start planning for tax proactively. We'll catch you all real soon.